Ladies and gentlemen, welcome. Today I have another interview on my channel, and this interview is special in the way that although we're usually talking about crypto from the technical analysis perspective, fundamental analysis, but there's another very important aspect here, the psychology. And psychological point, especially in such an emerging market as crypto space, is, in my opinion, actually plays a significant role, maybe more even than the traditional markets. And today I have a guest who is specialized in psychology, Asger Folmann. He is the owner and the author on another crypto channel, which is called In It for the Money. And as you see, he's an honest guy, because most of people are saying like we are in technology, and he's saying I want just to make money, guys. And he's frank about that. So he has an experience investing in Bitcoin, altcoins, and using his skills in psychology and everything which is around this space, this area, applying to investing and trading. So I think that he has interesting perspectives on these things, and I would like to ask him questions about his views and how to improve your strategy, your skills in that space. Welcome, Asger. Very happy to see you here.
Yeah, thanks for having me, Kirill. Always a pleasure.
So, yeah, very good. So maybe you can tell a couple of words about your background. So your master in psychology and
Right.
what you did after that, how you came to crypto and how you use it and so on.
So I guess I've always my original plan, so to speak, was to become a psychologist. I had this idea that even having a little practice with a with a Freudian couch and all that stuff. But I think I realized in my early 20s that I wasn't gonna take that route, and I actually spent about 6 years working in social psychiatry as
Wow.
a kind of a mentor for young adults with all sorts of mental challenges. But yeah, so I majored in psychology because it was a major area of interest to me, and honestly, I could have just like kept right on doing the PhD and all that stuff. But I also felt like no more school now. I've spent like 12 years educating myself after elementary school, so I'm gonna stop now. But yeah, okay. I want to jump just to the how it applies to the markets. I feel like there's a really interesting point here. So a lot of people.
Hmm.
So I joined the crypto party. I started investing in very late 2016, but I really only became full time engaged in the crypto space since mid 2017. And as most people probably know, watching this right now, 2017 we saw this insane, yeah, just crazy growth in the overall crypto markets and Bitcoin, obviously, but also in all the altcoins. And it's become like a thing that you can just say without explaining why. But this was all driven by hype. This is something you hear saying, and FOMO, fear of missing out. People just saw, oh my God, it just keeps growing, growing, growing. And some people did jump in, such as yourself and myself. But you probably recognize the situation. You tell your friends and family like, hey, well,
Yeah.
maybe you should buy this Ripple thing. It's like it went 10x. It seems to just keep going. And they're like, no, I don't think so. And then like right at the peak of the market, everybody was like, okay, let me get in, right? And everybody got in and lost all their money right away. But this is really, yeah, people like to, especially all the anarcho-capitalists maybe in this space, they like to talk about people as sheeple. And as I just said in a conversation I had yesterday, actually, with my wife and one of her friends, like I think as a psychologist, I have to say that all people have this. It's an innate tendency. It's an inherent tendency for all people to try to conform with the herd. And that is, yeah, I think it's an evolutionarily ingrained tendency in us, because that pretty much just favors our survival. So just doing what your immediate surroundings do is typically good for you. It's good for procreation, right? Because you're popular, and then the opposite sex is attracted to you, so you procreate better, and you have more friends, you have fewer enemies, so survival odds are increased, and those are the types of things that we should also consider in trading and investing. That being said, I recently had, I guess I'm just gonna call it an epiphany, but I recently had this idea that I should actually probably take a few steps back here, because I bought into this idea that, okay, this was all driven by FOMO, by hype, by herd mentality or hive mentality, maybe rather, it was like once the dominoes started falling, like everybody just followed through, did exactly what other people did. And even I still remember, like, the first time I did a video on a specific cryptocurrency. Well, I don't remember the specific video or the specific instance, but I remember like having this weird feeling looking at the chart afterwards. Oh, it just went up 20%, and like then it went up 80%. And I remember asking myself this question: I wonder if my coverage of this had anything to do with that. But I completely dismissed it. It wasn't until I met up with another guy who was like, he wanted to collaborate and stuff, and we had a beer, and he told me, of course it's you, and then I started noticing, I guess it might be my coverage that has this effect. But these days, not so much. I won't say that it never happens. It does sometime, but of course you can't really tell if it's just a correlation or if it's an actual causal relation. So that's number one to watch out for. If everyone is talking about the same thing, if all the crypto YouTubers talk about this specific altcoin on the very same day, if even the mainstream media, it's the same thing goes for the stock markets.
Self-fulfilling prophecy.
Self-fulfilling prophecy. That's exactly what it is. And it's not necessarily, it doesn't have to mean that, it's driven by people with bad intentions or just looking to dump their bags. I try to like work out my own ethics on this topic, actually. Like, like sometimes, especially in the beginning, before I really realized, before it truly dawned on me what was going on, that my coverage of specific altcoins might actually affect the market movements immediately after. I was like, no, okay, so I'm just going to hold this back, because I don't want to be caught in this ethical dilemma. And then it completely tanked, and I'm like, okay, that's stupid. And then people started calling me a shiller and accusing me of dumping all my tokens. I'm like, I still hold all my tokens, you asshole. Sorry, pardon my language. I don't know what your language policy is on crypto.
No problem. You can tell everything. It's free internet, free speech.
Yeah, right. Okay.
Kind of, right?
But so that's one aspect. But so here's number two. It is true that this market, and especially the bull run of late 2017, early 2018, was driven by easily manipulable retail investors. There's no
Very
doubt
polite
about that.
expression.
Thank you. But what is not completely overlooked, but what is often not talked about so much, is the fact that some hedge funds realized that this was going on, and they simply looked at I was going to say the charts, but rather the market overview sites, CoinMarketCap, CoinGecko, etc., and they saw, okay, these are the higher market cap cryptocurrencies. These are growing every day. These have solid communities. Let's make them grow another 10% each and every day. And they did that until they cashed out, right? And yeah, you can probably easily guess when they cashed out. It was right around the peak of the market, right? And I wasn't really aware of this, but I was actually approached by some of these hedge funds. One of them was very friendly guys, who were based in Singapore, as far as I remember, but they were an international team. And they offered me a position as a hedge fund manager, which is completely insane when you're a, when you're like, I don't have any professional financial trading background.
You can say tell him, let's go to my room and you can go to the coach and we can talk about it.
Right. Yeah, tell me about your childhood, and I'll tell you
Yes,
which
yes.
altcoins to
Are
buy.
you sane, actually?
Right. But that's a completely different topic. But I just wanted to get that point across, that whenever herd mentality kicks in, and again, I want to stress the fact that doesn't mean if you find yourself being caught up in it, and I've tried that in the past, definitely many times. When you catch yourself investing in something because there's a lot of people that are bullish on it, the actual threat against you in that situation isn't necessarily the community or the people who told you about it, but rather some people, some hedge fund managers or just high net worth individuals sitting behind the curtain, such as the green one I have right here, watching what's unfolding and just playing you, right?
Yeah, that's absolutely correct.
Right.
I mean, in my perspective,
Right.
I think that actually Asger is a bit of playing a modest card here. For those who don't know him, he has a channel on YouTube, more than 50,000 subscribers, and also he's an author of Folmann Report. This is the newsletter and kind of the market observation tool for the particular people who are wanting to subscribe. So he's covering altcoins and Bitcoin, of course, and many things in a quite depth. So basically, I don't know, can we tell your major profit on those altcoins which you invested initially? What's the biggest gain you have, if you can tell that?
The biggest gain, let me just pull up the exact number because I know what I told you. Oh, here it is. Okay, so this I believe this is from early 2018, if I'm not mistaken. We had one altcoin that saw gains of 14,267%. So yeah, 142x.
142x, guys. So
Right.
and Asger, as he said, he doesn't have like the background from trading or from investing per se, but he actually has a different background in psychology, and his knowledge allows him to kind of treating his behavior in the market in the way that he is still profitable. So the major point, I think, which everybody are familiar with, is when you are entering the deal and when you're especially new to the market. So let's say you are wanting to go to the same XRP at the top. This is the herd mentality. So you want to buy the top, you want to sell the bottom. This is one of the most common mistakes. So, and there are plenty of another mistakes like that. So if you can deal with one of those mistakes and basically avoid doing that, like the major ones, then you'll be much more profitable. So what other things like that, from your opinion, which people can kind of find and pick and try to eliminate from their behavior on the market?
What's the question again, Kirill?
Oh, so I'm sorry. What are in your opinion, what are the major mistakes, like the one, for example, buying in the top and selling at the bottom, which people do while they're trading, investing, especially when they are newbies, and then those mistakes which they can avoid as soon as they will spot them?
Okay, so this is going to be very simple, but a very, I think you and I touched on that last time
Okay.
we spoke privately, but I think a lot of the people who followed me during the early stages of my investment at the Folmann Report, the investment newsletter, and the YouTube channel, they took, let's just say they invested $100, right? Maybe they got their money back 20 times. I know a lot of people did that. I did that many times. And then they took all their profits, put everything in the next thing.
Right.
Did it again. It's a miracle, right? It really is a
Yeah.
miracle. If you're someone who's usually dealing with the traditional financial markets who buy blue chip stocks and stuff, you're probably thinking this can't be true, but it was true. Then it happened again, right? And all of a sudden you have like $20, $30, $50,000 maybe, right? And you just keep doing it. What happens is sooner or later you're going to hit one trade or one investment that goes south, and you're gonna tell yourself excuses to hang on to it, and like, no, I still believe in this. This in it for the money guy talked about it. He's bullish on it. I'm like, but yeah, that's another thing. But let's just stick with this. Like, don't just reinvest all your profits all the time. That's actually like one of my big realizations since I entered this game is managing my standard position size, as I call it. I have like 1 unit is 1 standard position size.
Yeah, that's absolutely true in my opinion as well. Like people are falling in the hole of the greed, basically. This is another part, the greed. So they are having first or second successful deal, especially in crypto, it could be 10x or something, and they are thinking that it will last forever. And of course, it doesn't. Maybe it's better actually to have it earlier than later, so you get this lesson before, and then eventually will not do that. So
how did you learn that, if I may ask?
I lost, of course.
right.
I'm not that smart to learn on the mistakes of other people.
But the reason I'm asking
is
because I used to gamble, like go to casinos and I played
poker
like
is a good thing.
Semi-professional poker and stuff like that. But that's where I learned it. So I didn't have to relearn it. And also if people want a different approach, I don't know, since you're actually born in Russia, maybe did you ever read Dostoevsky's I think it's called The Gambler?
Yeah, sure.
Great novel, and that's exactly what he does, right? He sits down and he wins against all odds, and he wins again, and he keeps until he loses everything. But I know this is very simple, but even for an educated audience, which I'm sure your audience is, I actually am pretty sure about that. It's still a healthy reminder, even though you don't do this. Obviously, most people watching this channel don't. None of them probably do this, but it's still a good reminder to. You still need a strategy for how to deal with it. Okay, so let's say this investment goes as you plan. So you're sitting with your 5x or your 12x or whatever. Like, what are you going to do with the profits? Are you going to, like, how big a percentage are you going to reinvest? And are you going to reinvest how many different new investments are you going to spread it out over?
Yeah, that's exactly what is happening with people, especially new to the market, which are coming there. They're kind of facing the new problem which they didn't have so far. And by the way, speaking about that, do you think that, let's say, a person, again, from your psychological background perspective, a person comes to the investing reality and getting that easy money, especially in crypto space, do you think it changes person's mentality and the way of looking at things? Maybe it's like a fooling himself or herself when these things happen.
What you're asking me is, does it create some sort of bias in people if they enter the market and then they have like a crazy? Well, yeah, I think so. But so here's the thing. So I don't remember the actual name of the researcher who conducted this research, but it was like a 1970s study, I believe, from some American psychologist. There's this. Some of you have probably heard of it before, but it was like it's called the taxi driver bias or something like that.
Yeah.
Have you heard of it? But the story goes, and it is based on a real observation, that there was a New York taxi driver who, I think, like during his first week as a cab driver, someone tipped him $100, and he kept on expecting for the following 30 years. He was expecting every new customer to tip him $100, and it never happened again. And of course, this you can't really. There's not too much science behind that, but it's been replicated. You can create like an experimental design and replicate the basic dynamic of that. And it turns out that if you give people like one early stimulus, that creates an expectation bias in people that is going to happen again. And actually, this is the fascinating and disturbing part, is that if it happens again, let's say a few days later, this bias is not as big as it is if it only happens once.
Sure.
And that is, I don't know, like, I think how that's translated into crypto language, that pretty much speaks for, it's pretty self-explanatory, right? But I do think that most people in this space, so they do that. They jump into this, they make one investment, and let's say it blows up, in the positive sense, right? then they reinvest their profits, and then they lose everything. So I think people tend to learn, yeah, pretty much the hard way. But was it Socrates that said that a smart person is able to learn from his mistakes, but a wise person is able to learn from other people's mistakes?
Yeah, although it's very rare case when people do, including myself. I usually learn the hard way. But okay, it's definitely a big thing. But how can we deal with that? What a regular person can do to avoid those pitfalls? How can we like fight with ourselves to be better, to try to learn on other mistakes, other people's mistakes, and actually don't make ours? How to fight, how to defeat our own mentality, our own nature?
So this is going to sound completely insane, and I'm even surprised that I'm going to hear myself say this now. But
Okay.
I think about 6-7 years ago, I had this realization that I had always been very interested in other people, like predicting people's behavior and all that stuff. It was always very interesting to me. But I realized that, yeah, but regardless of what information I study, it could be like the most sound scientific evidence or whatever I look at, it is all of this is filtered through me. I interpret all of this. If I don't understand this filter, which we usually on a day-to-day basis refer to as me, I don't really understand the data. If I don't, you know what I mean? It's like if you have like let's say you have like a little computer and a little AI app on your phone, and each day it would give you a piece of information. But if you had no idea like how this AI was designed, or if it was even designed to tell you the truth, or that data, that information, quote unquote, would be worthless, right?
Right, exactly. I think
It's
you're
like
just
meeting.
talking about the basics of psychology. So as soon as you understand what the problem is, it's easier to deal with it. As soon as
Right.
you realize the problem, right? Not psychology, psychiatrics.
So I don't disagree with that, but what I will encourage everyone to start doing right now is to. I think most people are in the habit of observing other people. Like if you're in a relationship, obviously you in some sense you observe your partner, right? If you live with your family, you observe the other members of your family. But you should right now turn that laser sight around and start observing yourself. Because and I guess this is a completely different story, but I just realized, man, I have so many shortcomings. And again, it doesn't mean that I'm a bad human being. It doesn't mean that there's something wrong with my personality. Actually, most of these shortcomings really is only an expression of me being a talking monkey, right? A human being is what I'm trying to say.
That's cynical, but yeah.
It is a little cynical, but right. But that's the thing. In our culture, and I realize you and I live across the globe from each other, but in like Western culture, in the broadest sense you could possibly imagine that term, we like to look at ourselves. We like to present ourselves, and we don't really typically examine ourselves too much, unless like we have something like a personality flaw that causes obvious problems in our lives. But just understanding some basic human fundamentals that doesn't just apply to you because you're you, but because you are a human being.
So well, if I understood this right, then you suggest to basically look at what you are doing and how you behave sort of from the other perspective, from a side. So on yourself, like you are not yourself, and then try to estimate whether you are doing right or wrong or reasonable from that perspective. Okay,
Yeah.
so basically like a realization of what you are doing
Right.
from the outside of yourself.
I could give you like a brief example. I think this could have been one of the things that kind of got me into this line of thinking. So I used to work in social services. One of my coworkers was a guy called Frank. He was a great guy. He was ironically very frank about everything. One day he asked me, "Hey, can I ask you something?" And I said, "Yeah, sure. It's kind of personal. Do you mind?" I'm like, "No, I don't mind. Just ask away." Like, did you ever notice that when people ask something from you, you just drop whatever you have in your hands and you go and help them. And I'm like, yeah. I'm like, that's because I'm a good person, right? And I said, oh yeah, okay, maybe, you know. But then I started noticing, man, I'm a pleaser, you know. I please, and then I remember as I came home from work. I used to live with my ex-wife back then, and typically when I got off from work, I would go to the kitchen and I would make a sandwich for myself and a sandwich for her. And then I realized, no, I'm not making a sandwich for her. I'm a pleaser, right? I need to change this right now. And she was like, why did you make a sandwich for me? I guess I can make it myself. And then I realized, okay, I have to find a balance in this. And of course I was overcompensating, and that's what you typically do when you discover some flaw in yourself. But it's the same thing. And I could mention other examples like this. If you ask people, are you a better driver than the average driver, or an average driver, or a worse driver? It was like 85% of people think they're better than average, and per definition that's impossible, right?
Sure.
But again, it means this applies to you too. You Kirill, I'm talking to you right now. I'm talking to everybody right now. I'm talking about myself too. Like, I'm an animal, right? My nature as a human being, I can't change that. I can modify it. The best thing I can do is become aware of it. And how this translates into trading and investing is that every time you have an impulse, you should ask yourself, what kind of impulse is this? Is this an emotional impulse? Is this a greed-motivated impulse? Is it because I want to make money so I can get a new girlfriend or a new car, to get a status symbol, essentially, so to increase my odds of procreation? Okay, so that's might be taking it a little too far, but yeah, analyze your own behavior on a daily basis and get in the habit of doing so. That's what.
So you said we are kind of animals, and the worst thing probably to that way is that we're not only animals, but we're herd animals, and we are trying to go with the crowd. So maybe actually another way to kind of work around this is to look where the crowd is going. So because most of people are, well, the majority of people are doing worse things. So if the price, let's say, of some asset is going to the top, then the most of people, especially retailers, they are buying. So when you see that everybody are doing the same thing, and you're trying to like look at that in the way whether they are behaving from their emotional side, not the logical side, maybe you shall kind of take a counter trade in that way, and in this way, like try to go against the majority of people. So
Right.
does make sense?
And yeah, that does make sense. And that's obviously also the reason why yourself, Alessio Rastani, many of the financial gurus, or whatever you want to call them, many of them flirt with this, being a contrarian is a good thing.
Yeah, it's a question where and when.
Exactly. Because that's the thing. Like, if you look at the average savviness of an average person in the street, we can pin a number on it if we want to. If we compare that to the average savviness of a crypto investor, I honestly think the crypto investor is pretty savvy. Let's just call it smarter than the average person. And of course, a lot of the rich hedge fund managers are probably even at a higher average, right? And they they can probably tell, oh, now we have all the contrarians coming out, right? And let's face it as well, like, there's a lot of stuff being planted in the media, and there used to be a time where, like, the newspaper would call you and ask for an interview if you did something in your local area. These days, it's pay to play. You can call Bloomberg and say, hey, I would like to be interviewed by this journalist next Sunday. And they're going to give you a number, and if you nod and smile and tell them yes, it's going to happen. That's how it works.
That's crazy.
It is insane.
So basically, in the way that major players in the market are trying to use psychological aspects to make people buy or sell at certain point, in a similar way, media also join this game, and they also like boost this to a new level, because of course it's an exposure. Everybody watch TV or internet, YouTube, and we're kind of part of that. Well, I hope we're trying to do it in a positive way. So yeah, it's a major force, I guess, which is hard to fight and struggle with, but I guess we'd have to. And the first enemy is ourselves. So like fight with ourselves shadows.
I'm not even, I don't want to call it that, but I agree. The first enemy, first line, I should be the first line of defense, but it's actually the first enemy is our own psychology. But it's not. I don't look at myself as an enemy. I like myself, you know. But I'm just realizing, understanding that, you know, I have this, like, even for people who might be religious, or a lot of people are, right? You don't have to be an evolutionary psychologist or biologist to subscribe to this idea, but just recognize that I am me. I have a unique personality, which is not identical to any other individual on the planet, but I'm also a human being, and in many ways, perhaps more importantly, I am just like everybody else. So like, just having that understanding is really important. But of course, there's more to it, right? Because I even remember, like, when I made my first investments, I realized this is just, in some cases, this is just FOMO. You know, I'm just FOMOing in. But I'm like, yeah, but then I could check, like, the first YouTube video came out like 2 days ago. There's probably gonna come more, you know. Let's just FOMO in, you know. But it was like even kind of anticipating future FOMO. And essentially, if we hear a company saying, "Oh yeah, we're planning on the launch of our marketing campaign," that's essentially what they're telling you, right? Oh yeah, the FOMO is going to kick in next week, right? Yeah.
Yeah, well, I guess it's a long path. You just have to start with small steps and try to evolve and more and more, being better and better. So it's not only in psychological aspect, but also in trading, investing, in every kind of aspect of your life. All right, I think we covered a lot of things, and it's actually already more than half an hour talk, so not to keep people that long. Let's wrap it up, and maybe you can express your view on the current situation in the market. So what shall we do?
Get out, guys. It's over. No, just kidding.
It's scam. Yeah, like, I don't know, your view on Bitcoin, on altcoins, future, and this year, next year, what is happening?
So the big thing right now that's not completely trivial is, so we saw the US cutting interest rates by 0.25%.
10 years. First time.
Come again?
It's first time for the last 10 years, I think.
Right. But they also, in the same breath, said, this is it. We're not going to stimulate the economy more, I believe. But the interesting part was that, because I remember, like, I wasn't an active part of the markets like before 2008, but I followed it a little bit on the sidelines, just as a hobby kind of thing. And whenever that happened, stocks would typically soar. It would be a good thing for the markets. And the exact opposite happened here. And Bitcoin saw some pretty decent growth, but of course that's a drop in the ocean if we, like, compare the dollar value being added to the market. But it was really interesting to me because, you know, I've always thought, like, because there's going to be a financial crash again, like a global financial recession. Obviously, it happens. I think the average between those, the spaces between them, is like 10 years, and we're due for the next one, right? And yeah, that's true, right? But it was a surprise to me to see that, okay, first of all, it had a very negative immediate effect on the traditional financial markets, especially the U.S. markets. The S&P 500 fell, I don't know how many points the next day, and the next day, as far as I remember. And the crypto markets did not tank. That is a really good sign, in my opinion. And I'm not entirely sure what it means, because again, this is what makes maybe I should just say the Bitcoin market so unique. Is, first of all, it's relatively small compared to gold, for instance, or whatever.
Sure.
But we also have this weird situation where obviously a lot of hedge funds and other major financial institutions and countries in some cases have like bought enormous holdings of Bitcoin. I have no doubts about that. But we still also have like these, and I don't know how many there are. I don't know how many Bitcoins they hold or Bitcoin they hold. But we do have these whales who are really just early miners, or like even not the pizzeria guy, but people who just happens by stroke of luck basically to own 100,000 Bitcoin.
Yep.
And those people are, in my best estimation, also manipulating the market. That creates some unique and very weird dynamics.
But in long term, do you think that the fundamental behavior of stocks and actually the United States policy in terms of the monetary policy is kind of positive for Bitcoin? Do you think so?
It's a good question.
No? Neutral? Hard to say.
I'm not neutral, but I don't know. I don't think it depends on what you hope that this will become in the long term.
$1 million or 10. And I'm not joking.
So I think if that's like our benchmark, right? If we want Bitcoin to hit $1 million, I am afraid that we do need legislation globally, but especially in the US. I'm not a huge fan of legislation. It makes my personal life a pain, right? So it's a major hassle. But of course, we can't just have a globally unregulated financial market. I would like to, but we can't. And again, when I say I would like to, it's really just out of my little selfish, egotistical perspective, like. And I like to sort of distinguish between my own little selfish perspective and what would benefit us most as a species. So yeah, legislation. Yeah, the more legislation we get, the earlier, the slower growth will be, but the more sustainable it will be. That is probably the simplest way I can put it.
Yeah, nobody wants to have a slow growth. Everybody wants to become rich tomorrow, or at least next week. So,
rich tomorrow.
Yeah, we have to be patient.
That's a great name for a YouTube channel.
Exactly. Yeah.
Rich tomorrow.
I shall rename mine
put
a patent on that name. Yeah. All right. So I think we covered a lot of things, and hope that people will find it useful and at least interesting. If you would like to know more, and especially from this kind of perspective, then go to channel In It for the Money. I will leave the links in the description, and maybe some other things like the report and everything. So feel free to try and see what is there. And thanks again for joining me and for your thoughts on crypto space, and with this kind of special way and special angle to the problem. Thanks a lot.
Thanks for having me, Kirill. Always a pleasure.
If it will be possible, then we'll make more videos, especially if people will ask for some different kind of content, and absolutely we'll do that, I hope. Okay, guys, thank you very much for watching. I hope to see you in the next video, and goodbye.